The average Canadian freelancer overpays the CRA by over $3,000 a year, not because they cheated, but because they didn't claim what they were already owed. These aren't loopholes, they're in the CRA's own guide. So let's go through every single one. Before we get into specific deductions, one rule governs all of them, and if you understand this, the CRA becomes a lot less scary. According to the CRA's T4002 guide, an expense is deductible if it was incurred to earn business income and it's reasonable in the context of your work. That's it. Not only if your accountant says so, not only if you're incorporated. If you're self-employed and you paid for something that helped you earn money, it's almost certainly claimable. Now, the CRA also expects you to split any expense that has both personal and business use. Your phone isn't 100% business unless you have a dedicated business line. Your car isn't 100% business unless you're tracking every kilometer. Before we dive in, I put together a free 2026 Canadian Money Moves checklist that covers all of this and more. Link is in the description. The home office deduction is the biggest one most freelancers underuse. According to the CRA, if you use part of your home regularly and exclusively, or almost exclusively, for your business, you can deduct a proportional share of your housing costs. Here's the math. Say your home is 900 square feet and your office is 135 square feet. That's 15%. You can now apply that 15% to your rent, heat, electricity, internet, and home insurance. On $2,000 a month in housing costs, that's $300 a month or $3,600 a year, deducted straight from your taxable income. If you own your home, you can also include a portion of your property taxes and mortgage interest, but not mortgage principal. The CRA is specific about that. There are two calculation methods: the detailed method, which uses actual costs, and the temporary flat rate, which was introduced during COVID. The detailed method almost always gives you more money back. Use it. 3 more deductions that are almost universal for freelancers: vehicle, phone, and internet. Vehicle first. The CRA allows you to deduct the business use percentage of your vehicle costs: gas, insurance, repairs, even depreciation through the capital cost allowance. But, and this is critical, you must keep a mileage log. Date, destination, purpose, kilometers. No log means no deduction if you're audited. The CRA is explicit about this in T4002. For your phone, the same logic applies. Track what percentage of your usage is for business. If you use your phone 60% for client calls, project management, and invoicing, 60% of your bill is deductible. For internet, most freelancers can claim a significant portion. And if you work from home, the CRA generally accepts a high business use percentage as reasonable. Some freelancers who work exclusively online claim 100%. Just be consistent and documented. Let's put some real numbers together. Say you're a Canadian freelancer earning $70,000 Canadian dollar. You claim home office at 15% of $24,000 in annual housing costs. That's $3,600. Vehicle at 40% business use on $6,000 in annual car costs. That's $2,400. Phone at 60% of a $1,200 annual bill. That's $720. Internet at 80% of $900. That's $720. Software subscriptions fully deductible. $600. 50% of business meals, $400. Total deductions, roughly $8,440. At a combined federal and provincial marginal rate of around 33% for that income bracket, the math says you just kept nearly $2,800 that would have gone to the CRA. Now, 2 mistakes that flag audits. First, claiming 100% personal use items as business. The CRA cross-references lifestyle against income. Second, inconsistency year to year. If your vehicle use jumps from 40% to 90% with no explanation, that's a flag. Keep your rationale documented and consistent. A few more deductions the CRA explicitly allows that freelancers often skip. Professional fees, your accountant, your lawyer for business contracts, fully deductible. Advertising, Facebook ads, your website domain, your portfolio hosting. Office supplies, even furniture through the capital cost allowance. Training and courses directly related to your work, fully deductible. Professional association memberships. Bank fees on a dedicated business account. These categories are all listed in T4002, Canada's Self-Employment Bible. Now here's a move that compounds everything. Take your tax refund and put it straight into your RRSP. Two reasons. One, your RRSP contribution itself creates another deduction, reducing next year's taxes. Two, it starts building your retirement account since you don't have an employer doing that for you. In Canada, your RRSP contribution room is 18% of last year's earned income, up to the annual CRA limit, $32,490 for 2025. Stack that refund. Make it work twice. Once you've claimed those deductions and your refund lands, here's where to put it to work. Wealthsimple and Questrade both offer commission-free RRSP and TFSA investing, perfect for freelancers building their own retirement stack. EQ Bank's TFSA savings account is worth having for your tax installment fund. That's the money you set aside quarterly for the CRA. Links to all three are in the description, and the free 2026 Canadian Money Moves checklist has a complete freelancer tax deduction tracker built in. Every category we covered today, formatted so you can hand it straight to your accountant. Link is in the description. If you want weekly Canadian money breakdowns that actually make the math make sense, follow the Gain channel. New video every week.